Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, March the 30th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talked about in this daily market commentary is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today in the form of ADP non-farm payroll change up 200,000 versus 195,000. So right in line with expectations. Nothing really market extraordinary there. Crude oil inventories came in at 2.3 million barrels versus 3.1 million barrels. So slightly lower than expected, as you can see here from the chart of light sweet crude oil /CL, just slightly positive on the day. On that number, came out a little bit higher, rallied up, but we have since come off and tested unchanged for the most part. Still showing that there's a lot of crude oil out there. We're going to have to really start seeing some drawdowns before you see any type of real rally in crude oil as far as I'm concerned, or some kind of crazy news coming out of Iran saying that they're going to comply with OPEC. But moving on to the markets. Yesterday we talked about this. Yellen speaking really gave the market a boost, kind of giving the green light for equities, if you will, on the upside. Really rallied off this morning, but have since started selling off in the last hour or so, coming back down and testing a value area. So I'll show you that here in a moment. But on to the ES, as you can see, for E-mini S&Ps /ES, I should say, up 9 points on the day, but giving back about half of the gains they saw earlier on. This was the overnight session where we kind of have just slowly crept up, but then off of the open with the data points and everything else, the euphoria has kind of worn off a little bit, I believe, with the expectation that there's not going to be a rate hike. A couple of Fed governors came out and said that they were still planning on some rate hikes in 2016, but it probably would be a little bit slower pace. Well, I think a slower pace than what they expected, but a faster pace than what we have seen. Funny thing is, we haven't seen a rate hike take but 9 years. So, I guess anything could be faster than 9 years between a rate move. So that was along those lines. It made me kind of laugh because statistics can lie. So you can say just about anything. Yes, we're going to increase interest rates at a faster pace than we did in the past. Well, in the past, it took us 9 years. So that being what it is, it could take 6-7 years and that would still be at a quicker pace, right? Anyway, but as you can see here, we have the value area low, the value area high, came up and tested the value area high and are now kind of slumping down there. And this value area low for today is really holding as a support, as you can see here. The only thing that I've done really is covered a trade today. I'm just kind of wait and see. Apple, as you remember, I needed to add some long deltas. Apple was a pick for me because it has really low implied volatility. So when there's really low implied volatility, the only thing left to do is go out there and buy some options. So I did that in Apple as a delta adjustment for protection to the upside. I didn't really have any upside strategies on. So Apple being one of the biggest influencers of the overall equity market, I bought some calls in there quite a bit ago, and I had on the April 110 calls, and I originally paid 37 cents for those, looking for it to come up and test that 110 strike when we were down around here. So paid only 37 cents for those. Probability of touch was about 57%, I believe, at the time, and lo and behold, we came up there and tested that. I waited a little bit too long. When we were in the 110 area, those when that went into the money was looking really nicely. As soon as it started coming off and went out of the money, I kind of scrambled to cover those, especially with this bar the way it's looking right now. It doesn't look really good. So I covered those for $1.38. So I paid 37 cents and collected $1.38 for those. So that was a nice trade. In the overall market with it slumping, I just decided to cover those. It met my objectives and fulfilled that. That's about all I got for you guys today. Go to ProTraderStrategies.com. Check out the webinar on Friday. Should be a really good one. We're getting a lot of participation in those. And the other thing is the trades that we put on for last webinar, which was the straddle with the defined risk to the upside that was appropriate for the IRAs. My LinkedIn one's looking really good. All of those strategies are looking really good. It was a nice trade to have in this, where if the market really starts rallying, I'm protected to the upside, no upside risk on that. And if we start coming back down or trade sideways, like I've talked about with that NASDAQ being right there at the point of control, and that's kind of a nice little comfort zone for the bulls and the bears, because that's really where the value is perceived right now. So those trades will decay out because we collected a credit for those and are starting to look really nice right now. So go to ProTraderStrategies.com and you can check out that strategy. It's like I said, appropriate for an IRA, and there's no upside risk. So if you're slightly bearish or market neutral, that will be a good one right now for those kind of strategies. So, and you're protected if the market, lo and behold, goes to the upside. All right, that's all I got for you guys today. If you can't take that, take it easy.